Years, especially coming out of COVID, we've seen a very high volume of business acquisition financing. So you've heard of SBA. If you don't know what SBA is, you got a lot to learn. But there's so much more financing beyond SBA that I think a lot of your clients would find very helpful. So first thing I'll do is just explain what we call the 4 pillars of commercial finance partners. So there's really a few things that we do. First, consulting services is just the core of our business. We get a referral for a client that needs financing. We're very transactional, so normally we're on the buy side of these business acquisitions. Your buyer has a deal under LOI or they're considering to make an offer. They come to us to review the transaction. We do all the analysis. We figure out, all right, can we actually get this company financed? We give feedback, and then we decide on how to proceed. It doesn't have to be just for an acquisition. You may have a client that needs working capital after the acquisition. You may have a client that needs to restructure their business debt before they can even sell their business, just to free up cash flow, make them stronger. So we can do more than just acquisition financing. And that's the core of our business, the consulting services. We are a direct lender as well. We have a line of credit through a bank. We lend on our own balance sheet for accounts receivables financing. A lot of times this will be in conjunction with a loan for an acquisition. So we do the financing for the purchase of the business. The company needs ongoing working capital afterwards. We can provide that missing piece. We can do standalone as well. We can work with a startup business, but we typically like to see at least $10,000 a month in accounts receivables. We'll go all the way up to about $500,000 a month for accounts receivables financing. So we have a lot of flexibility. We don't have this massive organization and bureaucracy and all this red tape we have to go through. So we can actually get deals in place within 24 to 48 hours. That's the fastest that we can go. On average, about 1 to 2 weeks to get financing in place for a client. And that's us directly lending. So we have an entire team for accounts receivables financing. Debt advisory is just a higher level of what we do. These are clients who typically go up to $130 million in enterprise value, usually $3 million and up in EBITDA. We have a division of our company that specializes in those types of transactions, and those go outside of the SBA and these conventional business loans. This is where we really focus on private credit sources, right? So we do have the capability of going above and beyond. How does that apply to some of the smaller, acquisitions? Because a lot of these guys that we deal with in the beginning are just starting out, making the first 1 or 2 acquisitions. But a lot of times it's part of a larger strategy, a roll-up strategy, bolt-on strategy. They're trying to gear up in the next 5 to 7 years to sell to a private equity firm. So we can go above the smaller business financing. And then lastly is insurance services. Okay, so insurance services we started back in 2023. I am personally licensed for health, life, and annuities, and also property and casualty insurance. Property and casualty insurance really revolves around risk mitigation, risk transfer. So you're doing an acquisition deal, let's say it's an asset purchase agreement, the insurance does not transfer right over to the new company. In a stock purchase it may, but not in an asset purchase agreement. Okay, so the client is trying to close their deal and buy the business. They don't know anything about insurance, so now they have to get the insurance in place just to close the deal, to satisfy the financing requirements. Well, who do they have to go to? They have to find someone. They don't know anything about insurance, and it's a very confusing topic. We can handle that all in-house. A lot of times a client may be required to get a key man life insurance to close the deal as part of the financing requirements. We can handle that for our clients now. So we try to make this as a all-around one-stop shop, right? And that's just a little bit about us. So if you refer a deal to us, hey, we try to keep it all in-house so that the client's not going in different directions, getting straight in different directions, going to a different broker. It all is under one umbrella. And we try to work with you as an extension of your business. So you're not handing it off to some stranger. To the client, we're all working on this transaction as a team. Okay, so I'm going to go through the program that we're talking about, but a lot of it has to deal with why we would go with this conventional financing. So, anybody here ever closed a deal larger than $5 million? Anybody want to close a deal larger than $5 million? Okay. SBA 7A caps are only up to $5 million. Okay. The conventional program I'm going to go over with you goes up to $15 million. All right. That's 3 times larger than an SBA 7A loan. Anybody ever have a client that says, I don't want to do SBA loans? I've tried it before.
Yeah, many.
Happens all the time. They think, oh, SBA loan, I don't want to do that. That's going to take too long, right? Anybody nowadays have a client that is not a U.S. citizen?
Yeah. Well, I wouldn't say it that way. Well, it is correct. Because the green card holders, they're not citizens as well.
Exactly. Recent rule change.
SBA won't do that anymore.
Yeah, of about 3 weeks ago, even a 1% partner that is a permanent resident cannot even get an SBA loan to begin with. So that's completely off the table. Okay. Anybody ever have a deal where there's going to be some deferred compensation or delayed compensation? So they have cash at close. Buyer doesn't want to give all the cash at close.
Yeah.
There's some kind of earn-out agreement in place. SBA loans don't accept all that, right? If there's exactly, there has to, in SBA loans, you can only have a seller note. Most of the time, it has to be on standby for the full loan. Okay. What about any other retained equity? Right, the seller of the business maybe is not selling all of the company. With an SBA loan, if the seller holds under 20% of the business, they have to personally guarantee for 24 months. If they hold more than, so let's say they're selling 40% of the business. Right, so they sell 40%, they have to guarantee the entire loan. Yeah. They may not want to do that. That may be a complete deal killer. Okay, so that's another reason why a conventional loan is going to be more flexible. So any of these, creative structures, SBA loans can be very difficult. People have a, bias against SBA loans. So I'm sure that in many cases you have a business for sale, and you will put a pre-qualification letter within that SIM report saying SBA pre-qualified. Now, in many cases, that's probably the best bet. But in some situations, you may come across a buyer that says, you know what, I like this deal, but I can't do cash, and I really don't want to do an SBA loan. I'm not even going to submit an LOI. You don't know that. It could happen. What if you have in your SIM a pre-qualification that says SBA pre-qualified and conventional financing pre-qualified? That buyer is now thinking, hey, I'm interested in that. I want to know about that conventional program. Now you have a whole new conversation. So just starting off with the loan size, $500,000 up to $15 million. Okay, so look, there could be some situations where a deal is eligible for an SBA loan, but they may not want an SBA loan, right? I had a deal back in December. It was a $2.5 million acquisition. $1 million of it was real estate. $1.5 million was for the business. 25-year terms. 25 years is what they're really aiming for with this program. The rates on this program is a little bit different than an SBA. Okay, an SBA loan is going to be prime, which is 6.75 currently today, plus up to 3%. This works with the 5-year U.S. Treasury note. The 5-year U.S. Treasury, you could look it up, it changes every day. It's about 3.68% right now, plus 7.5 to 9.5%. Okay, so if it's Treasury is 3.6 right now, plus 9, that's 12.6. Plus an extra half a point, that's 13.1. That's going to be a little bit higher than an SBA loan in most cases. But I'll tell you where this still makes a lot of sense. The 5-year Treasury note, by the way, this deal, the way we're going to work this is the rate will be fixed for 5 years at a time. With an SBA loan, it's quarterly adjustable. Every quarter goes up and down. We're hoping that rates go down now in the next year or this year, but it's not guaranteed to go down. And it could go back up. Who knows what happens? At least if it's a 10-year term or 25-year term, The rate's going to go up and down during that time. This at least gives people a fixed rate for 5 years at a time, so they know what their payments are going to be. The closing fees on this is going to be about 3%, very similar to an SBA 7A loan. An SBA 7A loan has a SBA guarantee fee. It's about 2 to 2.5%. So this is going to be very comparable to what the closing fees are. There is a prepayment penalty. Just comparing again to SBA, SBA 10-year terms have no prepayment penalty. 25-year terms usually have 3 years. This has a 4-year prepayment. It varies slightly per deal, but in essence, it's 5% first year, 3% second year, 3% third year, 1% fourth year, and go on. But that is flexible. Okay, so it's not set in stone. Again, it's negotiable. But there will be some prepayment penalty, but the amount, does vary. And the timeline to close, it takes roughly about 2 weeks to get the full approval in underwriting. And then about 30 days afterwards to close. So on average, 45 to 60 days start to finish, is the time frame on this. SBA loans, the reason why people think it takes so long, and it does in many cases, is because of compliance. The lender has to meet all the SBA guidelines, and they have to be very careful not to go outside of that. With this, there's no SBA guidelines to go through. They don't have to worry about these compliancy issues, so they can be very flexible and make decisions much quicker. All right, so I'll go through a few differences how to identify this. This is the gist of this. Yeah. So the cash flow, this is a 25-year term compared to a 10-year term. All right, if we compared a $5 million SBA loan, okay, prime plus 3, this is SBA 7A right here, $65,000 a month. Conventional term loan here, even at 12%, it's only $52,000 a month. Okay, this is a $5 million SBA loan. It's $13,000 a month in savings, $156,000 savings per month. That could be the difference in qualifying for the loan as a whole, because this is all based on the debt service coverage ratios of these lenders. It's about the same, about a 1.15 with both of them. But getting a 25-year term could make all the difference in actually qualifying for that $5 million deal. Collateral requirements, all right? So what they're looking for here is there needs to be a real estate component. With, again, comparing SBA loans, to get the 25-year term, the real estate has to be owned by the business, right? Or at least the business has to occupy the property, at least occupy half of the property. And the funds of the loan, if it's a $2 million loan, at least $1 million has to go towards the real estate to get that full 25-year term. Okay, with this deal, first position lien on the property, we only need 31% asset coverage. So for example, if you have a deal that's, let's just say it was a $1 million deal, with an SBA loan, you need $500,000 of that to be real estate to get 25 years. With this, you only need $310,000 of that $1 million to get the 25-year term. Okay, so that's much less if we have a first position lien on the property. And it doesn't have to be owned by the business or occupied by the business. It could be a property that's free and clear that the buyer owns. And a lot of these business buyers, I don't know about you guys, but a lot of the ones I work with are also real estate investors. Okay, so they have properties. All right. If it's the second position, we need about 51% of the loan to be secured by commercial real estate. If it's the second position lien. So that means that the buyer has, let's say, a personal home. Personal home is worth $1 million. He owes $450,000 in the mortgage, right? So he has 50%. Now he's got $500,000 in equity to secure a $1 million loan. We're only using a second position. With an SBA loan, that wouldn't be eligible. It would still be collateral to secure the loan, but they would get a 10-year term. With this, we can get a 25-year term. So the main point is it doesn't have to be business owner occupied. This could be for, residential real estate, could be Airbnbs, could be vacation homes, investment properties. Again, does not require first position lien. And we have people who are, highly leveraged, but they have a portfolio of properties. I have a guy right now, he's a used auto dealer. He just created a franchise to franchise out his model. We're doing a $8.5 million debt refinance on his current business, which is not profitable, and another $2 million to expand the franchise. He's got a $10 million portfolio of real estate with about $6.5 million of mortgage balances. So we're using the equity of that $3.5 million of the remaining equity in his properties to secure the business loan. We only needed 30% to secure his loan in that situation. So again, there's a lot more flexibility when it comes to commercial real estate. It doesn't have to just be owner-occupied. One of the last parts to understand the requirements of this is that, and again, you'll receive these slides, there's really three things we're looking for. Cash flow in the business, collateral, and personal credit. They must have collateral. It just has to have the real estate as collateral. But they need at least one of these two others. They don't have to have all three. So if they have strong cash flow, they have the collateral, but their credit's not that good. Okay, we're good still. They have the collateral, they have great personal credit, cash flow is not that good. We'll still do that deal. That can make all the difference for these businesses who have not been very good in financial management. You're getting a business who wants to sell. It's borderline on the cash flow. Most SBA lenders will say not good enough. It needs all of these to qualify. We can still get it done. Okay, so just
not the personal and the cash flow.
Yeah, no, it needs the collateral. Yeah.
And this cannot be something else.
No, it has to have the real estate collateral.
Boat, jewelry.
They will use other collateral, yes, but primarily it must have a real estate component. So this is not for every single situation.
Keep in mind, one of the reasons people don't want to do SBA loans because they don't want to collateralize their real estate.
Absolutely. Perfect example, quick one. I got a deal in California right now. They own 18 restaurants. They're trying to open, this is not an acquisition, but they're trying to open the 19th restaurant. High-end steakhouses. Two buyers, or two primary guarantors, have $18 million of personal net worth. They're trying to borrow $2 million. SBA lenders are saying these guys are too overqualified. They have too much. They're running into the SBA eligibility requirements. Plus, has $77 million of sales, but of their $10 million real estate portfolio, they don't want to pledge that as collateral. With an SBA loan, they have to use any and all collateral available, even if it overkills the deal. I have another deal right now. It's a debt restructuring. They're using the guy's commercial real estate. He has two properties, commercial real estate being pledged, and his 2021 Chevy Silverado been paid off. Why did they use that? I don't know. But the point is SBA lenders use any and all collateral available. It was available, they had to use it. All right? So with these, we're not limited to that. We just want to secure the loan. But it does need at least collateral and one of the two. Okay? Just real quick, why you would do something like this. Again, the maximum cap with an SBA 7A is $5 million. We got up to $15 million. We got clients right now that are making acquisitions, but one guy has $2.5 million already in SBA loans. He's got two other partners. He has to reduce himself down to under 20% ownership, so we don't have a personal guarantee on him, and we run into the $5 million cap. So the other two guys have to personally guarantee in that situation. It's part of a roll-up strategy. So he's already made $4.5 million of acquisitions, let's say. Now what happens to the next one? You can't go SBA anymore. So now we can go above and beyond that. Again, 25-year terms, and SBA, commercial real estate only, conventional, any real estate. Foreign ownership, allowed with this. Equity injection, I don't know if you guys ever get this, but I get these buyers all the time say, I don't want to put any money out of pocket. I don't have the money to put out of pocket. They still need some liquidity. They can't have $0, a couple $1,000 in the bank. I mean, they got to still have some personal liquidity. But to an extent, hey, SBA loans 10 to 20% on average is what they need. You can get as low as 5% down payment. If there's an expansion of a business, yeah, you can do zero money out of pocket with an SBA. But with these loans, the conventional program, we can work with zero capital injection.
That's a big selling point, plus this MCA, with the merchant cash advance loans. They're kind of like crazy rates, but people are taking it because of cash flow constraints. The problem now is SBA won't allow for refinancing. They must pay it before closing, and the problem is they don't have the money to pay it.
Correct.
And you can't do a deal. Some people have a lot in that. So here, they're allowing
Yes.
refinancing, which is a key point.
Big topic right now because clients they're running out of options. They have all these cash advances. They have to get rid of it. I had a deal. It's a $10 million. I was working with another broker. $10 million transaction. $5 million is real estate. $5 million is the business. This guy has over $1.5 million of cash advance debt. It's killing his cash flow. He can't qualify to sell the business, and he's too small for private equity. So anyone trying to come in and finance it is running into these issues because he doesn't have the cash flow to qualify for the business loan. So we had to take a step back, use this property, refinance the cash advances first. Okay, you waited 6 months to a year, then you can sell the business. But he wouldn't have been able to do it otherwise.
If he survives, because some of these loans are
He might not, yeah.
triple-digit interest.
Yeah. Oh, absolutely. Over 100% to APR. Correct. Government restrictions, SBA loans, okay. Cannabis, huge one. All right. I don't know if you guys see a lot of these or some of these industries like this. If it's hemp and it's a smokable product, SBA can't touch it. But if it's a rejuvenation product, creams and, ingestible type of supplements, CBD, those kind of things, SBA loans are going to, shy away from those. We don't have those government restrictions on that. And I'm almost done here, guys. I'm going to kind of go through, I'm going to skip this just for the sake of time. But here's just a few examples of deals. And again, you'll get these slides. And this is just a little checklist that you can go through and understand if your buyer is a good fit for this. So we went over a lot of this already, but you'll have this checklist to go through. But I will tell you this is our process, okay? Because this is really important in working with you guys. You send us an opportunity, you say, this is what's going on. We do an initial review. Just take a look at the financials, run it through our system, do the cash flow analysis. We can give you a pre-approval for the business. Say SBA and conventional on our letterhead saying this is our analysis. This is our feasibility report.
You need 3 years tax return?
We do prefer 3 years if it's available, yes. 3 years tax returns, recent financials. If you have something of that sort, we can start the work on that. No cost. No cost to the client, no cost to you, nothing like that. We'll tell you yes or no very quickly so you can move on to the deal, figure out what to do, but you'll know if it's viable or not. Borrower signs the LOI with you guys. Now we get their personal information as well. We have the business info, we get the personal info, we then try to pre-qualify for financing, and then at that point we can go to a specific lender. This conventional program, if it fits, we know right where to go to. That's it in a nutshell. You have my info. Want to work with you guys.
Yeah.
You send me the deals. I'm an extension of your business. We never go around anyone. We always want to bring if the deal even comes back, we bring it back to you.
I need that
So-
other card. I don't know what happened.
Absolutely. Happy to give you guys cards. So,
Already lost it.
Frank, thank you for allowing me the opportunity. I really appreciate that.
Questions?
You guys,
You do answer the phone.
all the time. I live on the
Called Darren
phone.
twice. I was going to give him 2 deals. Both of them, he didn't answer, and he didn't
Yeah.
call me back.
I got you. I got you.
So
Look,
if you answer-
I do
I
answer
do
the phone as
business.
much as possible. Yeah.
No,
Bring, yeah.
I'm very honest.
Look, I understand.
stopped
Yeah,
calling.
yeah. And Darren, he was traveling a lot this year so
It's
far,
okay.
but it is what it
We
is.
all
But
are
yeah.
busy.
Yeah,
so
yeah.
It doesn't hurt to send a note. I'll call you back, or just call me back the next day.
Understood. I'll let him know. Yeah.
Once you get the information, let's say I have a business now.
Yeah.
I liked what you explained us today, and I would definitely like to offer conventional loan to my
Yeah.
buyers.
Yeah.
So if I'm sending you today all the tax returns, 22, 24, 5, and 3, and the SEAM, and all details, how much time does it take for you to review everything and send me pre-qualification letter?
Good question. We process the information by the next day in our data processing, so we have all the analysis by the next day. Internal underwriting gets assigned that same day. Worst case, the following day would be full feedback. If you need it to be faster, I could run it personally through my system. Within the same day, I can get it back to you,
Okay.
unless some extraordinary circumstance, and I can't, but it would be the following day, worst case scenario.
I'll be sending you today all details.
Thank you. Yeah, I appreciate that.
Yes. That's great.
Yeah, we're very fast. Look, time kills deals. We know that. So we try to close these deals as fast as you guys do too. You know, lenders take a while. We're there to push them.
Yeah.
You know,
Exactly.
and that's how it works. So
Yeah.
thank you again. I'm gonna get